I'm an investor and I'm a speculator. I'm not a trader. The idea that I buy something that has no intrinsic value because I think the narrative around no intrinsic value trades higher is interesting to me, but it's of no value. I think, good aspect of myself as an investor and a speculator is I am completely immune at my age to fear of missing out.
Nice.
I've missed out on a lot of things and I've made a lot of things, and neither are of particular interest. I don't know if you remember this, Daniela, but I remember it well. 7 or 8 years ago, you and I had an interview and I talked about 2 types of speculative error: the error of omission and the error of commission. The error of omission is where you missed some hot penny stock that was worth nothing but traded from 25 cents to $1. And you missed out on the move from 25 cents to $1 because you were rational enough to understand that when it was selling for 25 cents, it wasn't worth anything. That's an error of omission. An error of commission is where you buy that stock at 25 cents and it goes to its intrinsic value, which is 0. Missing out is less of a sin than losing money. And so I would point out to people that are afraid of not trading a useless asset because it might go up, and ask them how they would feel if that asset traded to its intrinsic value. One of the things that I want to get across in interviews like this, Danielle, the reason that I'm disgracing myself so thoroughly in my declining years, is I want to point out to younger speculators that the correct way to build your wealth is to understand the delta between the price of something and some approximation of its value. There are other ways to make money, but the surest way to make money is to understand an asset that is undervalued in a probabilistic sense, and buy that asset. Think about why you bought it and think about what might cause you to sell it. There are all sorts of sexier theorems. And don't get me wrong, even at age 68, I'm not putting down sex, but there's a time and place for everything. And I would prefer that people didn't confuse excitement with investment and speculation. There may be other asset classes where the existence of the asset and proof of title are represented on the distributed ledger or the blockchain. I could very much see the distributed ledger replace securities markets, as an example. I could see them replace ETFs with much lower transaction costs, and frankly, doing away with the need for the depository trust corporation. All that's extremely exciting to me, extremely exciting to me. And I'll be watching that with interest. The idea that I'm going to consign my future to a medium of exchange that isn't a store of value, which is to say some sort of digital coin that replaces the Zambian kwacha or the US dollar or some other unsecured obligation of society's goodwill, is of much less interest. I think the Fed is in a corner. I think they're there by popular demand. When I see what the Fed does, it reminds me of an old Pogo cartoon from my youth, where Pogo is in the swamp and he says, "I have met the enemy and he is us." The politicians aren't, and the Fed aren't doing anything that we aren't asking them. Nobody wants to live within their means. For everybody, somebody else's necessary program is our definition of fraud and waste. So, we have met the enemy. The enemy is us, and I suspect it continues until it doesn't.
Until it doesn't. What does that look like, Rick?
I don't know. I really don't know. I know, again, as a journalist, you want a simple declarative answer. At 68 years of age, I'm fresh out of those. What it looks like to me is that you can't, however convenient it might be, rely on society to live your life. And so you have to save, because society won't do it for you. You need to do it for yourself. You need to invest. You need to forestall consumption so that you're able to consume in the future, because the idea that society will be able to provide for you in the same way that you have come to expect is very imprudent planning. I hope I do see that momentum carrying forward to the future. I think that your listeners need to be very careful about the cryptocurrency or currencies that they use as an investment.
Okay.
Remember that ideally, a currency is at once a medium of exchange and a store of value. What I like about the cryptocurrencies is that I get the part that its value stems from the size of the network, very much like one telephone had no value, but a billion telephones have very high value. The fact that a broader community adopts a cryptocurrency, and it becomes a medium of exchange, delivers some value in and of itself. But I think one of the things that's happened with the rapid adoption of cryptocurrency is that rather than being currencies, they've become trading sardines. And I think the very volatility that you see in some of the cryptocurrency, while it increases their speculative appeal, ironically causes them to lose their utilities as medium of exchange. As an example, if a cryptocurrency exhibits 10% upside in a week, that's great for the speculator who bought it on Monday, but somebody who used it to buy a bag of groceries wouldn't know how much they paid for the groceries, and the grocer wouldn't know how much he or she received from the groceries. So it's ironic that the appeal of the cryptocurrency, which is to say the volatility, diminishes the utility of the currency itself for its so-called designed purpose. Well, at present, for me, because I'm a 68-year-old Luddite, limited technologically, I'm out of all of them. They all gave me more price appreciation than I deserved. When the price of something that you understand or don't understand, goes up, and it goes up for reasons that you don't understand, I don't think that you're richer. You're simply more involved, was to say, if you don't turn it into cash, what you have is a bigger undescribed asset. So for me, I'm out of it. I struggle. I suspect that in my future, there will be several cryptocurrencies. And I like that. I'm a consumer of currencies. Mm-hmm. I spend Canadian dollars, I spend euros, I spend US dollars. And the idea that there's a whole bunch of currencies, some of which are private, each of which are competing to offer me more utility as a consumer seems to me like a very good thing. Because I like a medium of exchange that's similarly a store of value, I suspect that ultimately I'll have a reasonable amount of my savings in coins, if that's the right phrase, that are tied more directly to the price of gold, and in fact represent digital ownership, authenticated digital ownership of gold held on my behalf.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much, much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.